Alrighty, what's going on, everyone? Welcome back to another video, another day, another dollar with your boy. We're gonna be breaking down the ES futures contract. Per usual, we'll be looking at our futures contract, but this time you might notice something's different. See my face. Lo and behold, Christmas came and I got a camera finally. So you'll be able to see my beautiful face, just talking to you guys. Some of you that know me know what I look like. Some of you that don't know me do not know what I look like. So this is introduction. So we're going to break down everything for the last 3 days. Basically, we're going to get right into it. Last 3 days, we'll look at everything. Like I said, I haven't traded or even looked at a chart in multiple days. Last update we had was on this day here when we had this big liquidation break to the downside, which resulted in a double distribution day down. Price probe and everything. Then Thursday we took back the price probe and then basically just chopped around in the lower distribution for the most part. Try to get into the single prints and fill them, couldn't quite do it, rolled over, attempted to go trend down again, only to have a V-shaped recovery late in the day, take out both sides of the initial balance and the overnight sessions, and then ended up basically just going out with a day's high and the day's low. Nothing significant, no afternoon pullback lows, no afternoon rally highs for that day on Thursday. But we were still holding single prints. Now on Friday, guess what we do before we go into the holiday weekend? Friday, we open with a gap, push up, fill the set of single prints, try to get into the upper distribution and hold in the upper distribution, which only resulted in another liquidation break late in the day, which left a lot of buyers up here out to dry. And then we just kind of consolidate. I think we go out with a wide point of control here, though. And we do go out with an afternoon rally high as well. We go out. So the single prints did get filled, and then that gap to the upside did indeed getting filled. English. See, do you guys struggle with English? Because I fucking do. Anyway, so we filled the gap. Right, so we had a gap, filled the set of single prints, which was the intraday gap, right, from that liquidation break, was a rather large set. And then today, we pretty much just tried to one time frame up all day long, only to stretch our balance high. Remember, whenever we had this liquidation break back on Wednesday of last week, we put ourselves back into a pretty large initial balance. We can go ahead and look at that real quick just to kind of give you guys a refresher of what that looks like. And this is what that looks like. I mean, we were in a balance. We put ourselves back into a balance on this day. And then we slowly came back to the top. So the buyers are still relentless. They're still very strong. But so far, we're doing one of the 3 rules that we have, right? So one of the rules being you get near balance high and roll over. Okay. Next, you get near balance high, push through it and stretch it just as hair, right? Which is what we did today. We took it out by about 3 1/4 to the upside. So we just stretched our balance high so far. Or you do the third and the last thing here, which is you push through a balance, to a balance, through a balance, and away from it, right? It's kind of like egress in for like OSHA for the markets, right? Whenever you think about egress, for those of you that know OSHA regulations, which I highly doubt any of you do, but my job requires me to. Anyway, when you have egress, right, you want to get to the exit, through the exit, and away from the exit. Same thing here, that we have something blocking our path. We want to be able to get to it, through it, and away from it. And that's what we're attempting to do when we're breaking out of this balance to the upside. We're trying to get to, through, and away from that balance area, right? We're trying to run away from the fire. So buyers are still relentless, but we've only just stretched our balance. Now tomorrow we'll see how we trade, as we are coming into the end of the month, end of the year, right? So very short trading week for most people, and then we'll begin to roll over into the new year. We got 1, 2, 3 more trading days left, and then we'll open up the new year, right? And I think that day is a half day, or it's just futures. I can't remember exactly what it is. I'll have to look that up later. But yeah, we're just still remaining in a balance. Balance. Well, I'm trying to. Okay, I got to figure out my hotkeys here. But we're still in a balance. Balance high being 48.3450. Balance low being 47.48. Or excuse me, not 47.48. 47.4625 is the balance low. So we could continue to chop around in here. However, with the way these buyers are still in the market and the bid is still very strong with whoever is buying this market up, they're very comfortable buying. So until something changes, like maybe on a weekly, and we'll look at that here in a second, maybe we roll over on the weekly and take out a weekly time frames low, stop the one time framing up, and then begin to consolidate for a little bit prior to printing more all-time highs. So let's go ahead and mark destinations. We need to go through and mark our low of days here, as I have not done it. So if you guys want to stick around, I'll have this completed in just a second. All right, and there we have it, folks. So there's our low of day from the 21st down there at 47.5550. Low day from the 22nd, 47.8475. 9Y point of control right there at 48.07. Then we have our low day from today, which I just realized we were only a point away from getting that 9Y point of control today, and we could not get to it. 48.08 was the day's low day. Afternoon pullback low at 48.1675. And then our high day, all-time high, 48.3450, which is also just now stretched our balance high, right? So that is now a balance high on the daily. If we take that out tomorrow, we will be one time framing up yet again on the daily time frame. So for the downside, right, you have 48.1675. Below that, you will most likely go trade down that 48.07. And if you get below that, there's a vacuum to the downside, 47.8475. So keep in mind that was a 9Y point of control that we did not hit today and will most likely hit if we get below, let's just say 48.20. If we get below 48.20 tomorrow, open up below that, the likelihood of this afternoon pullback low staying in and holding is very slim, and we'll most likely go get 48.07 on the way down. So there's your destinations on the way down. Okay, then you have that balance low at 47.4625. Now let's go ahead and look at the larger time frame. Update you guys real quick on the monthly and the weekly time frames, just to have a brief look. So here is our monthly time frame, right? Here's our monthly time frame. We are one time framing up for the first month in a very long time, right? We've been in a large balance. We finally broke out of this balance, and now we're one time framing up, setting all-time highs. We're having a very, very tough time, though, finding acceptance above 48.0825, which was January's high from 2022, the all-time high from 2022. So it'll be very key for buyers to find acceptance above 4,800. If we do on the monthly time frame, come January, we could continue to one time frame up, and the limit on that is unknown, right? We do not know how much more this market wants to push up. The only downside to this whole thing is volume starting to dry up. It's not that you can't continue to grind up, right? You can continue to grind up on the monthly, the daily, and the weekly time frames on low volume. It's just not what you want to see as a day trader, right? You want to see volume, you want to see range, you want to see all of those things. Typically, whenever you have low volume, the ranges tend to be a little bit smaller. But very healthy so far on the monthly time frame. Maybe that's what's continuing to bid this market up, is all of those shorts that got caught below 4,200 or 4,300 that did not hold or did not get out in time. Right? Maybe they added up here at the 4,600 level thinking they would hold the monthly balance high, roll over, maybe scalp out a couple more points. Clearly, those people were very long, and now there is a clear signal to buy in this market. So they're getting out and possibly starting positions at the highs. And anytime we have a pullback, that could be the reason why you're seeing the bid step in on those pullbacks that we have, is because they're just averaging in on the way down, right? Dollar cost average is how they handle that whole situation. Weekly very healthy, right? Continues to one time frame up. Video I did a couple weeks ago, or last week, or 2 weeks ago, I did some measurements, looked at everything. Longest run we've had are typically from 9 weeks, 9 to 12 weeks. Typically is the one time framing up. So 1, 2, 3, 4, 5, 6, 7, 8, 9. We are on our 9th week so far of one time framing up. And usually that range extends from about 15% to 20%. So there's not much more movement to the upside. Historically, from what I've seen when I went back and just kind of look through the charts from a one-time framing perspective or from a market profile perspective, and just look through each and every year to see what the longest runs were of one-time framing up on the month or on the weekly time frame, and what the stretch or the percent return was. And typically it was from 15 to 20%. There really hasn't been a run longer than 12 weeks that resulted in a return from the low of more than 22% from what I'd seen. So on the upside, there really isn't a whole lot, right? However, I do have a target that I put back on November 21st of 51.2850. That is a target I have for 2024. I think we'll easily get there if we continue to move up how we've been moving up. But keep in mind that is also 330 points to the upside still. So we could get that easily if we do continue to one-time frame up. But once again, volume and range will be the question for us. And then lastly, on the daily. Oh, before we get into the daily, I want to show you guys one more thing on the weekly. One more thing on the weekly. So in order for the weekly to come back into a balance, all right, so look here. In order for this weekly to come back into a balance, we need to take out this low here, right? We need to take that low out at 47.4325, okay? Which would insinuate that we take out our balance low, right? Our balance low on the daily time frame, right? That it's stepping stones, right? You do something on the daily, then you do it on the weekly, then you do it on the monthly time frame, or vice versa from the smaller time frames, right? You do it on the 5 to the 10 to the 15 to the 30 to the hour to the 4 hour, right? And that all that price action builds up. Those are building blocks that build up to the daily, to the weekly, and to the monthly time frames. So from a larger perspective, though, we have those building blocks that continue to hold us up. But if they start to crumble with all the poor structure that we've had with the gaps and everything on the upside, this could come in rather easily, or not easily, I shouldn't say, but this could come in, take out that low, and then we have that weekly low, which is right there at 43.25, right? We would begin to one time frame down on the daily. Then the next thing for the sellers to have in their corner would to stop the one time framing up would be to stop the one time framing up on the weekly time frame by taking out that 43 level, and then you would come back into an initial 3-day, or not 3-day, excuse me. You would come back into an initial 3-week balance, okay? You'd come back into an initial 3-week balance, and then we'd begin to consolidate within a rather large range from the weekly perspective, okay? So keep an eye on that 40. If we do have a pullback, if this market does decide it really wants to pull back, that 46 to 43 range will be crucial for us to hold on both the daily and the weekly time frame to keep this market healthy on the upside. If not, then the building blocks will start to crumble, and that foundation that we had will start to crumble, and will slowly begin to drift back down, and would provide a good buying opportunity for those in the market on the long term. However, in the short term, the market would become slightly bearish. I'm not looking for that. As far as like a major pullback or correction. However, it would not be unhealthy for the market to have a little bit of consolidation in the bigger picture as from a weekly time frame, right? You stop the one time framing down in the weekly, your one time framing up in the weekly, you start the one time frame down in the daily, then you come back into a balance in the daily, and then begin to one time frame up again in the daily, then go back to up in the weekly, right? It's just ping pong inside these ranges. Hopefully you're seeing that how I'm seeing it, or I'm explaining it well enough for you to see it. And then lastly, here's our daily. We've just slightly stretched that balance high, so we need to update this. 34.50 is now our balance high. If we take that out tomorrow, we will be one time framing up again on the daily time frame. Once again, volume tends to be an issue for us in the ES contract. So we're going to look for volume to step into this market, but we may not see that until we get a pullback to maybe around that 4,700 level where that 20-day moving average is. All these moving averages have curled up rather nicely. 20 moving up, 50 moving up, 200-day moving up, but we do still have several gaps on the downside. So if this market ever decided to pull back, those would become targets as well. But I'm not looking for massive correction in this market, as we are in a bull market across the board, except for the Russell. The Russell's still having some troubles. But with all that being said, ladies and gentlemen, I hope you all have a wonderful day. We'll catch you guys in the next one. And let me know if you like the camera. If not, I'll take it off. See ya.